Welcome back to NASDAQ's Facebook Live. I'm Jill Malandrino with the Voice of America, and today we are hosting the Africa Investor Investment Conference over at the NASDAQ market site. Joining me now is Oscar Onyema. He is the CEO of the Nigerian Stock Exchange, a position he's held since 2011. Prior to this role, he served for over 20 years in U.S. financial markets with the American Stock Exchange. That's the first exchange I ever visited. Oscar is instrumental in integrating the Amex equity business to the NYSE Euronext and managed the NYSE Amex equity trading business. He has also held a number of positions at the NYMEX, or the New York Mercantile Exchange, where he managed futures market structure initiatives. Oscar, welcome back to New York City and the NASDAQ market site. Thank you for joining me today.
Thank you, Joe.
Walk us through the growth of the Nigerian Stock Exchange to date.
As you know, the Nigerian Stock Exchange was launched in 1960, started operations in 1961. On the first day of trading, we had about 19 securities, mostly fixed income products. When we fast forward to 2011, when we joined, it was really a marketplace for listing and trading equities, and also listing of fixed income products. We've since made it a multi-asset class exchange. We now offer trading and listing in equities, in fixed income, and in exchange-traded funds. We are working very hard to roll out derivatives, products, futures, and options sometime next year. So it's a market that has grown in terms of breadth. It's also grown in terms of depth and liquidity. We've seen $100 million days during the period just before the 2008 bust. And we brought that liquidity back to about $30 million average daily value traded in 2014. Since the slowdown in the commodities markets and challenges with FX, we've seen that number drop off quite a bit. But we believe that given how much we've done with technology, how much we've done with market structure changes, corporate governance strengthening, and strong international reach with regards to market data and the rest, that as the Nigerian economy begins to strengthen again, you will see the market well positioned to finance the growth of the economy.
Right. Well, with Nigeria moving away from commodity dependency and growing into other areas like agribusiness, mobile, green tech, that should open up for growth on the Nigerian Stock Exchange as you get more listings.
Correct.
Is that?
Correct.
So what new products are you working on in addition to the derivative-based products?
In each of the asset classes that we have, we're also deepening the product offering. So if you take fixed income, for example, we recently got approval from the federal government. There will be a listing of the green bond. It will be a first in Nigeria. A green bond essentially is a bond that meets or complies with the green principles, which is a UN set of principles supporting the Sustainable Development Goals, where you can finance infrastructure projects such as energy that is clean energy, right, transportation, emissions reducing type of transportation, or agriculture, or energy efficient housing, stuff like that. So
it ties into diversifying away from commodity dependency.
Precisely.
Right.
Precisely.
So how does the Nigerian Stock Exchange work? Is it still open outcry, or is it electronic based for the most part like U.S. exchanges are?
So it is fully electronic. Indeed, we use the NASDAQ trading platform, the Xstream, which we've branded XGen. And the access to the market is also fully electronic. So you can access our market right from your cell phone or any of your PDAs or your worktop,
right,
your desktop. Generate your orders. It goes into the order management system of the brokers, which these systems are linked directly into the matching engine of the exchange. And post-trade is also highly coupled with the exchange. That is the clearing and settlement and delivery, CSCS. So it's full straight-through processing. highly automated. However, the generation of orders so we don't have algorithmic trading yet.
Right.
Yes, we're working towards that.
Well, that could be a blessing and a curse, because that is a big issue that U.S. traders have for sure with high-frequency trading and the algorithmic trade. Another issue that we face here is liquidity and transparency, and I think that's really key for global markets to address. What's the Nigerian Stock Exchange doing to address those issues?
Liquidity and transparency is very key for us. We've done a lot of work around transparency, not only transparency in terms of market data, but also transparency in terms of the state of the issuers and whether they're complying with the listings requirements or not. In terms of better reporting standards, we now use the International Financial Reporting Standards, and we also have a strong calendar for corporates when they report on a quarterly basis for the main board, for example. On the broker-dealer side, we've introduced a lot of transparency in terms of the compliance levels of broker-dealers, in terms of how broker-dealers are performing from a volume and value traded. We do have our top 10 list. We've also worked very hard with the issuers to introduce stronger governance, stronger reporting culture. All of those things are designed to bring back confidence in the marketplace and to continue to drive deep liquidity in our markets.
And finally, we've seen a lot of exchange consolidation in the U.S. There are a number of African exchanges. Do you think you'll see consolidation as there's more intra-African trade? Do you think you'll have maybe 2 or 3 major exchanges and some of the smaller outliers will disappear? Or do you think it's important that each country has their own exchange at this point?
Given sovereign concerns,
right.
Given the fact that you have 11 to 12% intra-Africa trade currently, given the fact that we're just beginning to drive initiatives to have cross-border movement of people and goods and services in a seamless manner, so reduction of visa requirements and things like that, it's unlikely that you will see strong consolidation in the exchange space in the next 5 to 10 years. So what we are doing is, instead of trying to consolidate from an ownership perspective, is to consolidate from a regional integration perspective, where you get to keep your market structure, you get to keep your currency of trading and your systems. However, we link together and form certain minimum standards that allows us to have cross-border trading. Right now, those efforts are very prevalent in a sub-regional perspective, so West Africa, East Africa, South Africa. But as here, the African Securities Exchanges Association, which I happen to be the president, is driving a Pan-African linkage project. We are doing it in partnership with the Africa Development Bank. And the idea is to link Johannesburg, Lagos, Nairobi, Casablanca, 4 pilot exchanges. We've already started working with 3 other exchanges to come onto the pilot program. Between the 7 exchanges, we cover 90% plus of the liquidity on the continent.
Right.
And so when these exchanges are linked together, you would be able to have a Pan-African view of liquidity and access these markets through one pipe. So the idea is to facilitate trading, cross-border trading, and clearing and settlement of securities in a very seamless manner.
So we really are in the growth and expansion phase right now.
Correct, correct.
Right.
So you probably would not see the type of consolidation that you've seen in the US and in Europe in the near term. But certainly we are hoping that with initial linkages, with improvements in standards that are benchmarked to global standards, you can go beyond just a linkage from a technology perspective and begin to look at other kinds of linkages.
Well, thank you so much for joining us at the NASDAQ today. Welcome back to New York.
Thank you very much. Thank you, Jill.
From the NASDAQ market site in Times Square, New York City, I'm Jill Malandrino for the Voice of America.
Doing business in Africa, you can't afford to be without Africa Investor.